Hello everyone and welcome to our Trader Talks videos with me, Richard Perry, Market Analyst at Hantec, and we're going to be speaking to Steve Miley, the Market Chartist. Welcome, Steve.
Hi there, Richard. How you doing? Good?
Yeah, nice to see you, Steve. Thank you very much for coming on these videos with us. We're going to be recording a series of videos with Steve in the coming weeks, and hopefully we can give you a bit of an idea of what is going on in these turbulent times in markets, but also give you a few trading ideas to get through as well. So let's kick off today with the video, and we're going to be talking about the data for April, I think, in the coming days, which is going to be really important, and the market reaction to that data. On a bigger picture level, we're going to be looking at also the fact that economies are starting to come out of lockdown and the impact that that will have on across markets. So, Steve, what are you looking at?
Yeah, I think, the data is going to be important. I know you've kind of looked at those jobless claims data previously. So we have kind of an idea of where that US employment report's going to come in, but it's still going to be significant. It's the most watched, piece of data on the planet. It can't be disregarded. The reflection of, how much unemployment there is and participation rates, etc. So that's going to be important alongside, Thursday's jobless claims data, as you say. And then, exploring that whole world of this new world of coming out of lockdown, and what that means for European nations that are starting to tiptoe down that path, to plans that we're going to see maybe in the UK and in other parts of the world, and some US states coming out, some US states not coming out. What's the impact on the economy? What's the overall real impact that we've seen? We kind of know that the central banks have done their bit, the governments have done their bit, but what's the actual real impact on the real corporate world and the individual?
Yeah, quite right. And I think if you look at the fact that UK, for example, is I believe that they're going to get a plan across to us on Sunday. So we're going to get an idea of how the UK can possibly come out of lockdown. Obviously, there are a lot of different opinions on the best way forward, and the impact on the economy and whether you get a second wave of infections is going to be important. So far, it seems as though that countries that are coming out of lockdown so not having that second wave yet, but I think if that starts to pick up, that could be a real kick in the teeth again for markets. And it's interesting that we see markets at the moment coming up to this sort of period of crossroads. I think you're a little bit more bullish about the market backdrop at the moment than I am, but I think we're still seeing that markets are pushing risk positively. You can see equities that are going higher. But I still am a little bit concerned about some of the signals that we are getting, and I think some of the charts that we've got today reflect that.
Yeah, I'd agree. Yeah, it's going to be interesting. We go through the charts and to see those kind of slight differing views. And I think, this risk rally has got a bit further to run. But, bigger picture as we come out of lockdown, we're going to get a lot more information about the real damage that's been done. So potentially bigger picture, things still look very, 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 very negative for the individual and global economies. But for now, I do feel and we've got potentially another little pop higher for riskier assets before that happens. And we'll see that as we go through the charts today.
Yeah, and just very quickly, just noticed the comments from Vice Fed Chair Richard Clarida, who said yesterday that the US may still need further policy support, and obviously that means either monetary support or fiscal support from the government. But that would suggest that there could, again, when the markets react in some sort of way to some renewed negative data coming through, that will be another key moment, and how they respond to that will be important, I think. So, okay, so let's have a look at some of these trading ideas that we've got. Okay, let's have a look at our charts now. First of all, we're going to be looking at a commodities market, and that's gold. It's one of my favorite markets, and I continue to see that if you look at the first move that we've seen since the March low, we've had a massive 20-odd% rally. 3 weeks it took that rally to really take hold, but then since we've seen a consolidation, and that consolidation I think is going to be bringing gold back to a really interesting entry point level for the next bull move higher. I look at this chart and I really like the consolidation that we've got. The risk, I suppose, is that it turns into a double top, but I really like the support bands that you've got between 1640 and 1660. You've got some strong momentum indicators. They've just unwound back to their neutral areas. They're basically just reloaded some of that bullish momentum, I think, for the next leg higher. And I think that what we've got is the market just testing some downtrend resistance at the moment. It's not quite made it. It's a little bit of a consolidation, but I think any weakness in gold, I think, is a medium-term buying opportunity. You look at how the fundamentals are set up for gold. You've got monetary debasement, dovish monetary policy all around the world, pretty much. You've got the prospect, I think, of a weaker dollar down the line, and I think it all set up for gold pulling strongly higher in these tough economic times.
Yeah. I mean, I think we're very much on the same page on this one, really, Richard. We've certainly seen that corrective activity through for the late part of April, but market rebounding this week. Holding your zone there, 1660, 1640. Yes, there's that double top threat, but it kind of had the great opportunity to trigger the double top and completely rejected it. Count the trend line being broke, momentum supportive, and as you say, I think for me one of the key things is that the potential dollar weakness that we've got coming through. You certainly see real good top side on gold usually when we see US dollar weakening, and although the dollar's weakening against the euro, a lot of people look at, I think it's kind of a bit of a mistake, look at dollar index and think, oh, dollar index is moving one way, but really that dollar index is just an upside down version of the euro chart, right? The dollar index is 55-60% of dollar index
Correct,
is euro. So we are seeing euro weakness, but the euro's got its own thing going on. Really, the dollar is strengthening against the euro, but elsewhere, Aussie, Kiwi, CAD, yen, the dollar is weakening, and that dollar weakness, if that continues to play out, will only be supportive of gold, and then aiming for those those upside targets up up to the highs, up through 1746, 1750 for me. So the short to intermediate outlook remains positive. If you do get another chance at 1660, 1640, maybe time to jump in, but you've definitely got a real good exit point there, right? You know where to place your stop, you know where you're wrong. It's very clearly defined, and the risk reward looks quite good on that trade setup.
Yep, I think the support band 1640, 1660, as you say, very well defined, and I think is a very good area that is a support band that any weakness towards there, I think, is an opportunity.
Yeah, agreed.
Okay, so we looked at our commodities chart for today. That's gold. Now let's have a look at the equity index one. And we always look at the DAX is a good one, I think, for how the proxy for risk appetite is really pulling forward. And we've seen that the DAX, the first chart I'm going to show you the big decline that we saw in the DAX, 40% fall. We've actually reclaimed 36% of a rally. Now, don't get fooled into this rally thinking that means that we've pretty much retraced the whole move to the downside, because we haven't. 36% is nowhere near taking account of that 40% decline. So we've seen the recovery, but I'm really concerned, if you look on the technicals, how the recovery is just not really gaining too much momentum anymore. It's starting to roll over on the MACD lines, as you can see on the chart here. The histogram's falling away, negative divergence there on the histogram. The lines are starting to converge around neutral, and you've broken this uptrend. Steve and I sort of looking at futures and cash indexes and how the gaps have been playing out. Now, on the cash index, the gap is yet to be filled from last Thursday. 10,840 on that cash index was the low on Thursday. That is yet to be filled. And I think that is a really important moment. I think if that index cash is not filled on that gap, then that's a real concern, adding into the fact that this market could be rolling over. Now, the key breakout level was 10,137. That is holding on a nice band of support, and how that market reacts around that support is going to be crucial. Obviously, the first support is 10,426. That was Monday's low, and again, how the market reacts around that level is going to be crucial. But I still am a little bit concerned as to how the DAX is performing now. It's a bit of a proxy for risk appetite, because you can see these uptrends on a lot of charts have been broken, and starting to see the momentum of the recovery rolling over. And the DAX, for me, is one of these key index charts that will be reflecting that.
I think I'm a little bit more positive in here. Futures market in here going up and going right up into that gap. Cash market hasn't quite closed the gap. And previously at the high from last week, we failed at that bigger gap, that huge gap that we had from mid-March. We failed from within that big gap.
Again, that adds
11,500. Yeah, so that's a bit of a worry as well. However, we did hold at your important support, that 10,137, not only the breakout level, but then we held that right the way through mid-April, went down there 2, 3, 4 times. We've been down having a look at that 10,137 level and rebounded from it right the way through the second half of April. So I'm kind of clinging to the positive tone. I still think it's there. I still think we've got upside from here. But as we said right at the top of our chat here, you know, we're going into key data, jobless claims and employment reporting here. We're coming out of the lockdowns. All of that's going to be critical in the next 2 to 3 days, and we're going to have a much better idea. I think if we can take out those highs, you've got another 5% plus maybe to the upside. If we take out your 10,137, you've probably got 5%, maybe 10% to the back to the downside.
Key crossroads, Steve.
Yeah,
key crossroads.
Exactly. Key crossroads. And I hear your caution in there. I still think for me it's slightly, I'm going to be a little bit more bullish on that and give the rally the benefit of the doubt. But you know, my conviction is far less than it was maybe a week or two ago.
Yeah, no, I agree. I think it's a little bit of a worrying one for me at the moment, but how the market responds in the next couple of days could be crucial.
Yeah, agree. Yeah. So let's take a look maybe at the forex space now. Yeah.
Yeah, a good idea.
Okay. So we're now going to take a look at the FX space, and I've chosen the Australian dollar versus US dollar as my forex chart of choice. Again, really to look at that kind of the risk parameters as a risk proxy. And you know what? It's no surprise that this looks relatively similar, right, to your DAX chart in here. That uptrend line that we have, slightly different uptrend line coming from the very beginning of April, but that was broken in here at the end of last week as we backed off from that 65.70 level. And then we dipped below the breakout point, that breakout high from mid-April as well, but holding currently 63.68 the beginning of this week, an important level around 62.50, rebounding above there. And again in here, I'm giving this the benefit of the doubt. You know, the market's trying to reclaim, it's actually trying to get back above the old broken trend line in here that we still have on the chart there. And for me, the threat is back up to 65.70. So we are seeing some kind of positive murmurings. I saw this morning that we had some Chinese data in here regarding footfall and the shoppers out enforcing it, up 60% in here over the May Day holiday in China. So that's obviously fuels positivity for the Australian dollar as well, with that being one of their huge export markets. Australia also semi-successfully at the moment coming out of lockdown as well. So I mean, I think all those things keep that risk appetite positive. But again, you know, this is, you know, the chart is so similar to really that DAX chart. You know, for me, I think the threat is up to 65.70 and extending up to 66.85, maybe even significantly higher towards 70 on a bigger picture outlook, maybe going into the balance of May. However, if we break that 62.50 level, all of a sudden it's a Dow theory reversal. It all starts to look a lot more negative. So it's kind of, we're back where we were, sitting on the cusp of making a decision, going into these kind of critical next few days. How do you see that chart, Richard?
Yeah, I mean, just that word crossroads again, I think I probably overuse it in my work, but crossroads is important. I think the fact that the 64.50 area, that breakout point, is you're just trading around that again now, and it's struggling to get back above it. And again, that's a little bit of a concern for me, because that is also the underside of that old April uptrend. It is hanging on to that moving average, which what is that, 13 exponential. So that's obviously near term a key moment, but you just need to see this RSI holding above 50. I think again, just really is the last couple of days, those candlesticks not the most bullish in the world, I think, and that is a little bit of concern for me as well. But again, once more, how the market responds, maybe it's looking towards that payrolls data, how markets respond to this non-farm payrolls data on Friday, which is obviously often a key risk appetite indicator, is going to be important, because if you see the terrible data and it responds negatively, again, we could see these markets rolling over. But as you say, the Chinese data is going to be positive. Aussie is very much a play on China as well, as we know. So that is a positive. But again, this is another market that is right on the cusp of the next move, and it could be higher if you can see a positive response to that payrolls data at the end of this week, I think. But it needs to really break back above that breakout level again, and then it can look towards 65.70 once more. Yeah.
Agreed. Okay, Richard, it's been great speaking to you. I'll let you wrap us up.
Yeah, thanks, Steve. Really good chatting with you. I mean, today, first video in our series, and hopefully we'll be having lots of more chats like this, and we can discuss markets and do some more trading ideas for next time. So thank you very much for watching, everyone, today, and thank you, Steve, for joining me, and I'll speak to you all next time. Thank you.
Thank you.